On this episode of The Danny Moses Show, how the conflict in the Middle East may impact your wallet and your portfolio. Then my guest today is former Syracuse University and Miami Dolphins fullback Rob Konrad, who has had just as much success off the field as he did on. And he shares some incredible stories, from having his number 44 retired alongside Jim Brown, to trading through the great financial crisis, surviving 16 hours lost at sea, and how he uses his skills, hard work, and perseverance and applies it to his business today. Plus, my Kalshi Picks of the Week. A big show ahead. Let's get to it.
Over 30 years of beating Wall Street, predicting the famous Big Short. Now, he's here for you. This is The Danny Moses Show.
If you had been paying attention to certain asset classes in the markets and following geopolitical news in recent weeks, then the escalation in the Middle East should not have come as a complete surprise. Oil prices had been creeping higher, both here and abroad, indicating some form of supply risk. And gold, often viewed as a safe haven during times of geopolitical tension, had been rising as well. We also have seen U.S. Treasuries rally, specifically the 10-year bond, which drove yields to under 4%, even as we were getting higher than expected inflation readings. Simultaneously, the markets had been and are still digesting the potential impact that advancements in AI-related technology might have on employment longer term, as well as what it might mean for companies in sectors like software, that in turn has resulted in concern in the credit markets, as software companies have been large recipients of capital supplied from the private credit sector. Look no further than the stock of Blue Owl, a multi-billion-dollar investment firm at the center of private credit concerns. So what should you be watching, and what can you do about it? Gasoline prices have already begun to rise, and Kalshi event contracts are indicating even higher prices ahead. While hopefully this spike is short-lived, it will have an outsized impact on those already struggling with a higher cost of living at the lower end of the K-shaped economy. The White House is already discussing ways to deal with this, like reducing regulations and taxes associated with fuel and using our SPR, Strategic Petroleum Reserve, which holds over 700 million barrels, in an attempt to move gas prices lower. While these are quick and potentially fleeting solutions, the longer-term structural issues that continued unrest in the Middle East could have on oil prices, as over 20% of the world's oil runs through the Strait of Hormuz, would more than offset any near-term benefit from these quick fixes. Another issue related to the spike in oil is the impact that these events might have on inflation. We had already been dealing with recent inflation readings that indicated inflation was beginning to rear its head again, and higher energy prices would only add to that. Chances for Fed rate cuts have continued to drop as a result. And since oil is used across so many different sectors of the economy, it will begin to be passed on to the already stretched consumer. Lastly, if there was a potential economic bright spot, it would be a rally in the U.S. dollar. The dollar has been under pressure in recent years, whether as a result of our trade policy or concern about our debt. Its status as the world's reserve currency has been eroded. While a cheap dollar can be good for the stock market, as many U.S. companies sell their products abroad, a sustained drawdown can further add to inflation and uncertainty. Seeing a rally in the dollar at least brings back some confidence that it's still the most important asset in the world, but for how long? Let me just say that I am not even going to try and predict when or how these geopolitical events may resolve themselves or what the longer-term ramifications might be. But I do think we are in for an extended period of elevated volatility, and the markets haven't had to deal with that for a long time. But that pales in comparison to what we all hope for, which is the safe return of our troops and a more peaceful world. Up next, my guest who has dealt with his share of volatility, both on and off the field, Rob Konrad, joins me when we return.
The Danny Moses Show is sponsored by Kalshi.
Welcome back. It's great to have college and NFL football legend Rob Konrad join me on the show. Rob, welcome.
Thanks, Danny. Appreciate being here.
We were connected through a friend a few years ago. I've gotten to know you a little bit. Most people know you as a football player. Most people don't know you, obviously, as a business person. But let's start with kind of your journey to Syracuse as a kid growing up in Massachusetts and kind of what led you to the football path.
Yeah, so, growing up in Massachusetts in the early 90s wasn't exactly a beacon of high school recruiting. There wasn't really developed. Massachusetts was not Florida or Ohio or Pennsylvania from just the importance of the game. We raised more hockey players.
I was going to say hockey
than football players, but there's a group in our conference. We played in the largest conference. Matt Hasselbeck, Greg Camelo. There was like a small cadre of us that kind of came out at the same time and ended up making our way through college and the NFL. But from my standpoint, it's funny looking back now. I was at the time the Parade All-American was the top kind of award you could get. And I look back at that list, and it's Randy Moss, and that's a great group of guys. But I was one of the top 25 probably recruits in the country at the time. Was heading to Notre Dame. Which I loved offensive football. I loved the teamwork component of it. Whereas, 11 people have to do the right thing at the right, and to have a successful play down the field. Whereas in defense, you need one guy to, wreak havoc. And I say that simply because I was, from a linebacker and a fullback standpoint, it was important for me that I wanted to play offensive football. I always enjoyed it. I was going to Notre Dame, had a really bad visit with. Rest his soul, just passed Lou Holtz, and thinking back on it, and at the time Syracuse had offered me. They had used the fullback quite a bit. They had offered me Jim Brown's number, and which is kind of a big deal at the school from a recruiting standpoint. And looking around at the time, this was a time where Syracuse football. I went to spring ball when I was in high school, and Donovan McNabb was there. I knew he was going to be my quarterback for 4 years. Marvin Harrison on the outside, just loaded with talent back then on the Syracuse team. So I made the decision to go to Syracuse and wear number 44. Ended up being the last one wearing that number, but that was a big component to me heading to Syracuse.
It's amazing. So yes, it was Jim Brown, Ernie Davis, Floyd Little, and Rob Konrad are the number 44s, and you can see it posted, obviously, up in that locker room. So you had some big wins there. It was a great journey from there. You go to the Miami Dolphins, right, where we're sitting here today. And there's some great stories there. But just quickly, maybe your favorite Dan Marino story that may have happened in your first game.
Yeah. Dan's great. A great guy, and good friend. I wish I could play 1 year with Dan. And I wish I had the opportunity, and it was the last year of his career, and I wish I had the opportunity to play a lot longer with him, because he is on the Mount Olympus of quarterbacks from throwing, the football, and it was just, I would have loved to see what he was like when he was younger. But yeah, my first game in the NFL was Monday Night Football against defending world champion Denver Broncos in the old Mile High Stadium, and I was a nervous wreck as a rookie, my first game in the NFL. Steve Atwater, remember Steve Atwater was, that's when safeties.
27.
Yeah, he was 6'4", 235 coming in at safety. But they were a stacked team. But anyways, we ended up scoring what was a go-ahead touchdown in the game, and running off the field, we got a picture snapped of Dan and I, and I have it up in my home office today. But it's great. I thought that might be something I'd like to have signed, so I brought it to Dan and said, "Hey, would you mind signing this?" And he says, Rob, congratulations on your first touchdown, my 406th." Dan Marino, just kind of. I found out a little bit later on that was a common thing he did with all receivers, or he came up with a game ball or what have you. But it's it was great playing with Dan. It was a great experience in that game.
All right, before we get to business, let's talk about the business of sports. I know you know what's going on in this NIL, name, image, likeness, which has gone on obviously within college football. You're involved in the Syracuse program a little bit. Talk a little bit about what's happening in college athletics in general, and what's good about it and what's bad about it right now. Maybe.
Yeah, from my standpoint, there's never been a better time to be a college athlete right now. You're able, to monetize and participate and in the revenue generated, and certainly your own name, image, and likeness. I would love to have been in that world with number 44 in college and taking the cut out of every jersey that was sold. But with
how they do eligibility now, you might be able to go back and play one more year. And I'm not sure how it works. But
I got one play left in me.
Yeah.
But so from that standpoint, I think it's terrific. There's a bunch of guys I think back that I played with that never got to monetize their athletic ability other than their college degree, and it should have been part of it. There was just too much economics happening at the time. I think the byproduct of that is a development. I've always thought football as a game is a great development tool for young men in our society. Teaches at least when I was when I was in college, and you weren't being paid, you didn't have the ability to transfer. You were taught lessons of dedication, hard work, resiliency. Where today it's, if I get my feelings hurt or if I'm not being used in the right capacity, I'm transferring out, or someone pays me a couple dollars more, I have the ability to go out. So I think it's a great time to be a college athlete. I think they're probably missing out on, and my friends who are coaches at that level, just you said you wouldn't recognize the way we have to coach today versus how we grew up. And so I think some of those life lessons are learned in the process. But that's a really dynamic and evolving system. And
it just seems like an unfair system to kind of the schools that are not the top elite, but right below that. And of course, I'll put Syracuse in the top for you here. But if you're a coach and you recruit a kid out of Iowa and you build your whole offense around him and he's there for a year, then he's just going to transfer away. It seems like something needs to be done, whether to keep a kid there or something to protect all the work that goes into building these teams. So.
There's talk about these players being employees and having the right to unionize. Like I was a union rep for the Dolphins in the NFL, and having some sort of ability to collectively govern and bargain for these contracts that are being signed. And I don't think it's so much the NIL, the incoming ability to earn from the athlete, so much as it is the ability to transfer. If you reduce that ability to transfer to just one time, I think you solve 85% of the problems that come from this hybrid structure of NIL, versus the old academic structure.
All right, we're going to keep moving here. When you entered the financial world, obviously, one of the things you did was you were trading during the GFC, the Great Financial Crisis, through the State Board Administration of Florida, overseeing the pension funds, right? And so you were allocating at the time, or helping advise to allocate. You have a great line to me when you and I first met, and we started talking about, what was it like to be the Big Short? You're like, well, I had my own experience, and you kind of summed it up. You said, well, how do you trade the end of the world? Is what we kind of both viewed that. So talk about that experience and how that kind of shaped you.
So I just finished up with the NFL. I started my private asset management business during that time frame. But I was a gubernatorial appointee to be one of the 6 members of what was an investment advisory committee, which oversaw the entirety of the Florida retirement system, which I think the 4th largest defined benefit plan in the country. And that was the governor's term was from 2008 through 2012.
That was Christ, I believe.
Yes, Governor Christ, correct. And so that was the term I was appointed to, which just happened to overlap with a lot of what was going on with the GFC. So it was, I think you and I, when we first talked, kind of connected a little bit about some of the how horrifying it was to some degree, and kind of what took place and what I saw on my end. But so the line was, and this was from our executive director that we brought on right at the beginning of that term, but we're not going to never bet on the end of the world, because it's only going to happen once. And it doesn't matter if you're right. And meaning, look, if the end of the world takes place, you got counterparty risk, geopolitical risk, you got all the things that you know about, and you guys dealt with during that time frame where, to some degree, you had a bet on the end of the world, but there was a counterparty risk at the end, where there could be a situation where there's that bet turns out to be worthless. From what I understand, you guys exited before any of those things may or may not have happened, and ended up in a great spot. But
the counterparty risks we had were if you had your funds at Lehman or Bear Stearns at the time, and that's what created kind of the run on the bank, was that funds were concerned and started pulling their assets there. So quite a learning experience and shaped you. So another thing that shaped you was, how dare you try to just go on your boat and head over to the Bahamas just to do some fishing and have some alone time. It was a harrowing experience. I'm making light of it, but 16 hours at sea. Talk about that and maybe spend some time with that experience.
Yeah. So I think if you had looked back through playing football through my formative years, and kind of the lessons that teaches you about how to perform under pressure and in situations, how to think under pressure, and knowing that you can push your body a little further than you think you can, and to have the ability to persevere and not quit. All those things were brought to life about 11 years ago, where I was out fishing like a lot of people do in South Florida, and I was by myself. With in hindsight now, I'm not allowed to. So
You can always invite me to go with you.
yes, most people don't want to go with me if I'm driving. So
I don't think I could swim off as much as you did, but yeah, keep going.
About noon on a Tuesday, when there was a storm coming down, there was at the time we had a wealth management firm that worked with a lot of coaches and athletes, and a good dear friend and one of the top coaches at the time wanted to come fishing and visit. I was going to get my boat service, so there would be no issues when he came. But in any event, caught a fish. I was on autopilot. I thought I put my engine in neutral. Had one of the engines with these digital gauges just was in first gear. The combination of a wave and the fish, I went overboard, and usually that's not a big deal. Happens quite a bit, but I couldn't catch up to the boat because it was in first gear, and I made a mistake there. Long story short, I ended up in 10 miles offshore. I didn't see the boat on the way out. It was not a good situation. So yeah, ended up spending 16 hours. I think I traveled 28 miles with being in the Gulf Stream and swimming back to shore. And it was a really surreal and kind of life-changing experience on my end. Probably, what you had to go through that night to be able to make it to shore was probably make it 1 out of 100 times. And but from my standpoint, it was a situation where being able to take some of the lessons that from my kind of formative years and apply them to the situation. And a couple of little girls at the time, I was swimming home to make sure they weren't growing up without a father. And by God's will, I made it to shore. And it's something that I'm happy to talk about because I'm on borrowed time. About 11 years of borrowed time now, and got to watch my girls grow up and build businesses and do some great things, which is, I feel so blessed. No one got hurt. Even got my boat back after.
I was going to say, where did the boat end up? Where did they find the boat?
The boat ended up, the autopilot worked, and it ended up hitting a dead man's reef in the west end of the Bahamas. Go figure.
Right.
But it was a surreal experience, and something that has been positive impact on, from my standpoint in the long run.
Well, it's amazing what I'm sure it's shaped you. I'm glad you made it. And I would note to you, I kind of not joke about it, but 44, 4 times 4, the hard 8 is 16. So maybe there's a combination there as well. You made it. We'll go with that. All right. So beyond that, you've been building this financial firm. I'll turn to Equity Partners and talk about what that is, what you've been doing. And I think it's really interesting because you kind of find some of these smaller companies invest in operating and their cash flowing and so forth. Talk about what you're doing, what opportunities you see there.
Yeah, so Alternative Equity Partners, we're a lower middle market partnership focused firm that we look for U.S.-based service and niche manufacturing businesses. And what's interesting, I think, in kind of the current news cycle and what's going on is, if you think about lower middle market service businesses and the disruption coming from AI as a really opportunity, and the disruption that's taking place from a efficiency and margin standpoint, and we see it across the board, and it's becoming somewhat of a new application for our firm and our fund to bring to bear and compete, and it's necessary, especially in the marketplace, just from larger firms. But bring these different tools and agents from AI into place. We've already seen in our market tremendous efficiency pickups, and from a traditionally inefficient these small medium-sized enterprises that we get involved with are typically already tech deficient. Forget about AI. So it's it's something that we look for service companies that are going to be we're going to be able to incorporate a meaningful change from some of the new AI models that are coming to bear and some of the applications on top of that. So it's been taking inefficiencies in the market and having the ability to build those companies up, from a leadership standpoint, top rating management, a lot of M&A, multiple arbitrage, and build into middle market businesses and look to exit with our partners that we came in with, and obviously provide a outsized return for our LPs.
Yes, it seems like you found a nice niche that the big banks aren't going to look at. These companies don't need tons of debt, so they're a cash flowing company, right? And you come in and you bring in all your expertise and so forth, which is great. So hopefully that will continue in the future. I think there's going to be a lot more opportunities there, I think, as we kind of move on here, I would think so.
I think you're right. Yeah.
Well, Rob, listen, it's been incredible to get to know you as a friend over the last few years. Your stories are incredible. Many more to go. We'll go fishing, obviously, but I'll wear a life jacket, and I can do that. But, Rob, thanks so much for coming on the show. I hope to have you back again soon.
Thanks for having me again.
You got it. When we come back, my Kalshi Picks of the Week. Welcome back to the Danny Moses Show. It's time for my Kalshi Picks of the Week. Remember, when you are trading on Kalshi, you are trading with other users, similar to buying or selling a stock, and you can jump in or out of your position at any time to lock in a profit or cut your losses. These are just my opinions, not telling you what to trade or offering any investment advice. In the first few days of every quarter, Tesla releases their quarterly auto production and delivery numbers for the previous 3 months. For several years, these numbers have been accelerating as Tesla was mainly focused on their auto business and was producing several different models, including the S, the Model 3, the X, and the Y, and more recently the Cybertruck. With 4 main auto production facilities located in the United States, China, and Germany, Tesla had ramped up production to meet demand. Over the last year, a few things have occurred. Tesla has shifted its focus to autonomous driving, as it's slated to ramp up production of its Cybercab robotaxis at its Austin, Texas Gigafactory, and has begun to convert its Fremont, California production facility to manufacture Optimus robots at the expense of discontinuing both its Model S and Model X cars. We've also seen the winding down of EV tax credits that Tesla and other auto companies have been utilizing. While Tesla has a large solar business, the EV auto business is still the main economic driver. And while Wall Street might begin to discount the auto business and focus on Tesla's future products, these quarterly production numbers are still a market-moving event. While Wall Street is estimating production numbers of just around 380,000 for Q1, which I think are at risk, I'm going to pay up a little and use the 400,000 level and go under that amount by choosing no at 66 cents, which will pay out at $1 if I am correct. That is roughly a 50% payout if the production number on April 2nd comes in below 400,000. Again, these picks are not financial advice, but if you want to learn more, download the Kalshi app, read the rules, and use promo code Moses to get $10 when you trade $10. Back with my closing thoughts in a moment. Thanks again to Rob Konrad for joining me on today's show. I'll be back with you next week for another episode of the Danny Moses Show. In the meantime, you can follow me on various social channels or go to DannyMoses.com, where you can find links to my latest posts and appearances, including the What Are We Doing Substack I co-author with my fellow Big Short partners, and watch these episodes anytime on ScripsNews.com/Danny Moses. So until then, I will keep an eye out on the markets for what everyone is talking about, what nobody is talking about, and what I think matters most to you. I'm Danny Moses.